Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Tian and China Investments Company Limited, latest report. Tian and China Investments Company Limited offers a diverse range of businesses and services across various sectors. At the core of its operations are property development and investment, where it develops and manages residential, office, and commercial properties in China, Hong Kong, and the UK. The company's property portfolio also includes leasing out various types of properties such as offices, car parking spaces, industrial units, retail stores, shopping malls, and hotels. In addition to its property business, Tian and China Investments Company Limited is involved in healthcare operations, including hospitals, elder care facilities, and related services. Its other notable businesses include golf course operations, medical equipment trading, securities trading, financial services provision, strategic investments, property leasing, estate management, and money lending services. These diverse offerings reflect the company's commitment to expanding its presence across multiple industries and geographies. Tian and China Investments Company Limited maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Tian and China Investments Company Limited trades at a lower price-to-earnings ratio of 3 times and a lower price-to-book ratio of 0.22 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 52% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 2.31%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified from various sources within the company's financial reports. Revenue growth is primarily driven by several key factors. Firstly, the handover of residential units sold to customers of Phase 2C of Shanghai 1 Tian and Place contributed significantly to revenue recognition. Additionally, property development and healthcare operations also experienced notable increases in revenue, with a significant jump of $14.26 million in property development and a smaller, but still substantial increase of $1 million in healthcare operations. Furthermore, the company's investment in Tian and Medicare Limited saw an increase in revenue by $11 million. On the other hand, revenue decline is attributed to several factors. The decrease in fair value of investment properties held by the group, its associates, and joint ventures had a negative impact on revenue. Moreover, a significant drop in attributable registered property sales by 55% also contributed to the decline in revenue. Lastly, the absence of loans granted during the year resulted in a decline in interest income, further exacerbating the revenue decline. The company's debt level and interest expenses have undergone significant changes. An examination of the data reveals that non-current liabilities have increased by HK$622.4 million, from HK$3,869.7 million in 2024 to HK$4,492.1 million in 2025. Furthermore, interest-bearing debt has also seen an increase, rising from HK$1,268,338 in 2024 to HK$1,345,310 in 2025. However, despite the rise in debt levels, interest expenses have actually decreased due to lower interest rates on borrowings. This suggests that while the company's financial obligations are increasing, it is managing its costs effectively by taking advantage of more favorable borrowing conditions. Overall, these changes indicate a shift in the company's financial landscape, with both increased debt and reduced interest expenses contributing to this transformation. The company's performance varied across different segments in the given period. On a positive note, property development and healthcare operations showed improvement in 2025. However, these same sectors struggled in 2024, with healthcare operations being particularly underwhelming. In contrast to the improved healthcare operations in 2025, the segment of health services within healthcare operations performed poorly in 2024. Additionally, property investment also faced challenges in 2024, indicating a need for improvement in this area. Management is outlining a strategic approach to balance short-term financial goals with long-term growth. To achieve this, they plan to adjust their product offerings, pricing, and construction pace in response to current market conditions. The company will focus on developing projects that align with government and local market needs, such as the cyberpark and urban renewal units. To maintain flexibility and sufficient cash flow, management aims to secure bank borrowings with reasonable terms. They also intend to continuously monitor their gearing ratio and raise new external borrowings when necessary. Furthermore, they plan to acquire quality land bank and accelerate construction works for development projects, positioning the company for future growth while managing short-term financial obligations. The company's financial activities have been transparent and consistent. One notable aspect of the company's financial strategy is its commitment to paying dividends to its shareholders. This indicates a strong focus on rewarding investors for their loyalty and trust in the company. On the other hand, the company has chosen not to engage in share buybacks. This decision suggests that the company prefers to allocate its resources towards more strategic initiatives rather than repurchasing existing shares. That concludes the financial summary for Tian and China Investments Company Limited. Feel free to comment below, and I will be happy to answer them when possible.